For Tesla, let's just be honest about it. It'll be able to make more money since it's already been charging other vehicles more to use their chargers than it charges its own vehicles. And
lots of things in play here. People are speculating about what it means for earnings, but it's blatant speculation because we really don't know what the pricing is going to be at this point.
Elon Musk with Mary Barra, someone who has, it has been very hard for her to even utter the words Tesla over the years. And here is this partnership. What does it mean, do you think, long term, both for Tesla, but also for the legacy automakers, GM and Ford?
What is it about the stock right now and the company that is giving you so much bullishness?
Yeah, I think what's happening, it's a sum of the parts. I'd almost call it an AWS moment, almost an Apple services moment.
Another day, another dollar, and another week in the books. Tesla stock is testing new resistances, and next week will be no different. On the heels of some very bullish news, GM has agreed to use Tesla's NACS charger. We talked about it a little bit in the last video, but now we're going to take a deep dive because it seems like the media has no idea how to interpret this news. Let's get right to it. Tesla ended up closing at $244.40 per share. For the week, Tesla is sitting at almost 12% gains. Over the past month, 40%. And if you go back a year, Tesla is finally back in the green, up a mere 3.7%. With my bearish fair value estimate for Tesla being well over $350, I will continue to buy Tesla shares. But when it comes to short-term options, I need to find an entry point. I'm afraid we won't get back to these 215 levels. I have to decide whether or not IVs are sitting around 60%. I won't be able to make any short-term calls in this environment. But with the lack of bearish news in the foreseeable future for Tesla, I can't forecast any particular bad news. The next major event, Tesla's Q2 earnings, this is expected to be where the bottom of the barrel is when it comes to their margins, considering all the price cuts that they had. And riding the wave of the institutional investors is how you make money in the short term. Meanwhile, retail pulse. Individual investors ride Tesla higher. Individual investors are scooping up Tesla stock as the shares continue one of their longest winning streaks in history. What's that old mantra? Be greedy when others are fearful and be fearful when others are greedy. I have a feeling we're somewhere in the middle of that spectrum, and it's the individual investors like yourselves that is going to keep pressure on those short sellers of Tesla stock. All of this information that we're about to receive, partnering with Ford, partnering with GM, these are huge signs of Tesla's dominance. Before we get into the mainstream finance media, Morningstar has provided an updated analyst note. Tesla is sitting at nearly a $750 billion market cap, yet Morningstar maintains their $215 fair value estimate for Tesla. Respect. It's almost as if they aren't chasing the stock price. But let's be honest, how long before Tesla remains at these 250 levels before Morningstar actually updates their price target? I guess around 275, Morningstar will have no choice but to be like, yeah, maybe our price target should be around 250, right? They're going to continually chase Tesla stock as their business outlook is a little bit conservative when it comes to Tesla's grand plans for transitioning the earth to sustainable energy. Tesla opening supercharging network to GM and Ford, positive for industry, but neutral for the company. I disagree. Tesla and General Motors announced a charging partnership where GM integrates Tesla's North American Charging Standard, or NACS, connector starting in 2024, which will allow GM EV drivers to charge at 12,000 Tesla superchargers throughout North America. Tesla also recently announced a similar charging partnership with Ford to allow Ford EV drivers to charge at Tesla superchargers. After reviewing these announcements, we see no reason to change our $215 per share value estimate. Our narrow moat rating is also unchanged. So theoretically, the stock has traded higher off the backs of these two news announcements with Ford and GM. Morningstar feels that this is a nothing burger. This is not a revelation. Or maybe they've already come to the understanding that Tesla was already going to be the standard in North America. Third-party charging stations are going to be faced with an incredible business decision. One, you continue building chargers because the government is going to pay you to do so. However, nobody's going to utilize those chargers. What do we do here? They're going to have to offer the NACS charging station if they want to attract EV drivers with the NACS connector. Ford, GM, Tesla. Those are going to be your primary vehicles in North America. Tesla shares were up 6% at the time of writing as the market reacted favorably to the news. We view Tesla shares as fairly valued, with the stock trading at a little more than 15% above our fair value estimate, but in 3-star territory. Accordingly, we recommend investors wait for a pullback in shares and for shares to offer a discount to our fair value estimate before considering an entry point. You do this at your own peril. As a matter of fact, I was doing the exact same thing. Long term, buying shares without hesitation, without question, knowing that they're going to be worth double, triple, even in the future. But short term, I have to adjust my expectations for entry points. I was so willing to put in a call at the 210. I never got to see that level. And here we are, Tesla hovering around the 250 range. Very unlikely that anytime soon we'll see levels back in that area of 215. I missed that opportunity. Tesla's volatility will offer many more entry points. Trying to time the market is a fool's errand, but your boy's gonna keep wearing the dunce cap because I love the rush. We view the partnership as positive for U.S. electric vehicle adoption. By unifying EV fast charging under the NACS, EV drivers would be able to charge at any fast charger, similar to a gasoline car being able to fill up at any gas station. This is only going to be a catalyst for those that were kind of on the fence about an EV. If your tried and true brands, Ford and GM, are building electric vehicles under the Tesla standard, one, you're going to be like, oh shit, this is actually happening. And then two, you're like, why are they following Tesla? Let me go check those vehicles out. The traffic volume to the Tesla website is about to go bananas as soon as people start configuring their Cybertruck. Once the first deliveries happen with Cybertruck, I know in the Lone Star State, the traffic is going to be insane. People are going to be like, dang, that looks odd. That looks weird. How much does that thing cost? The questions will start to flood. And then adoption rate will increase. While this is positive for the industry, we see less of a positive impact to Tesla. Arguably, access to Tesla's fast charging network could be considered an advantage that would cause a customer to choose a Tesla over other EVs. However, we don't see the news as negative either, as we think Tesla's technological and cost advantages still remain in place, which underpin our narrow moat rating and will allow deliveries to grow to 5 million vehicles by 2030, up from 1.3 million in 2022. 5 million vehicles by 2030 from Tesla alone is a quarter of what their aspirations are. Let that sink in. Tesla is planning to do 20 million vehicles by 2030, which is absurd and gets them laughed out of the building by every automobile stock analyst in the market today. No one can truly fathom 20 million vehicles when Tesla starts reporting how many of their next-gen vehicles are coming off the factory lines in Nuevo Leon. How many are coming out of the expansion in Shanghai? This is going to be the fulcrum that turns the industry on its head. How many cars they're actually producing and selling at a reasonable price, truly a mass market vehicle. Let's see how the finance media is handling this news.
Let's talk some stocks. We do have some news in Tesla as the shares have been moving higher. They've been ripping here the last about 4 or 5 days, Renita. Kind of carrying the torch as some of the AI stuff fizzled out. Tesla's got its groove back.
It does, and it came through charging networks. So today, or actually last night, I saw this news come through as I was leaving the newsroom that Tesla is opening up its charging network to GM vehicles now, GM EVs, and that makes 12,000 Tesla superchargers available to GM EV drivers in North America. That'll begin in 2024, and beginning in 2025, GM EVs will be built to gain direct access to Tesla superchargers without an adapter. For 2024, they'll have to use an adapter. But GM is also integrating Tesla's supercharger network into the vehicle and mobile apps so that it'll be easier to pay for or reserve their charging stations. And for Tesla, let's just be honest about it, it'll be able to make more money since it's already been charging other vehicles more to use their chargers than it charges its own vehicles. And it's, I think, a push to slowly make Tesla's plugs the industry standard. Analysts have been saying this as well because it may result in squeezing out competitors and raise concerns ultimately. But this also pushes Tesla closer to qualifying for its piece of the $7.5 billion that the federal government is spending to speed up the construction of charging stations and make those more accessible. But Ford and GM, they risk becoming too dependent on their largest competitor. Oliver, Elon Musk said that this deal is going to be a fundamentally great thing for the advancement of EV adoption, but really it could be a greater thing for Tesla, as I think that Elon Musk has always wanted to dominate the industry, of course, dominate the world, but the plug itself is called the North American Charging Standard. I don't think anything is more blatant than that when you want to actually become the standard. However, Tesla does have its own risks in this, Oliver. It risks having more crowded stations, and Tesla owners have been complaining about the long wait times at EV charging stations, and this is only going to make them longer with two other vehicle kinds that are able to do it, and who knows, any more may come into the fold. But for now, analysts love this. Wedbush's Dan Ives raised his price target on Tesla to $300 from $215 a share. Morgan Stanley says that this is good for consumers, good for Tesla, and quite a good sign for GM in terms of moving the needle on capital discipline and collaboration.
Such a mixed bag of reporting. They don't know which angle to attack this from. Is it good news for Tesla, as their mission is to accelerate the world's transition to a sustainable energy economy, creating great products that actually work, as opposed to individuals doing a money grab, trying to grab as many federal credits as they possibly can while producing terrible charging stations or terrible electric vehicles. People want to associate billionaires to Dr. Evil. This is a weird concept for me, especially when you target Elon Musk, who's worked so hard to achieve his goals. And that doesn't just go for Elon Musk, that goes for everybody at his company, SpaceX, Tesla. They've bought into this. They want to see the prosperity transcend flags. As a veteran, I bleed red, white, and blue as much as the next American, but the vision is greater. It is of a worldwide nature. We're looking at products that we want other civilizations to be proud of. Not made in America, made by Earth. We need to expand our thinking outside of party lines, outside of the borders on the globe. And that's what Elon represents, advancement of humanity. And before I get on too much of a tirade, I'm going to hit on this other point, which will become a theme, is that current and future Tesla owners will be upset by this partnership, the long wait times. I would agree if Tesla wasn't putting up charging stations all the time, the expansion of the network with these partnerships in mind, and they will not be the only ones. Anybody wanting to build their next generation vehicles would be foolhardy not to use the next charger, especially if Tesla was going to allow them easy access from those vehicles that have those chargers. If the industry was producing 20 million electric vehicles every year, and all of them would be sold if they were able to do that tomorrow, but they can't. There will be a gradual progression of electric vehicle owners. And in some areas, there are extreme wait times, but Tesla has the data to circumvent that. They know exactly where they need to build new charging stations, and they're putting out requests. There's like a vote where you can go and say, hey, we need charging stations here, and Tesla will be like, okay, we'll put them there. The network is going to be open regardless.
Story, I think, now that you got GM and Ford both in the charging lane for Tesla, really kind of admitting that certain parts of this game they've just already lost. So a big symbolic event, I think, for Tesla for sure. Of course, Dan Ives with a colorful analogy here, playing chess. Others are playing checkers. Okay, I get it. Kind of seems true right now.
Well, on Thursday, General Motors announced that they'll be partnering with Tesla to gain access to the 12,000 EV charging ports across North America. GM CEO Mary Barra stated that the new deal will save the company up to $400 in EV infrastructure. $400 million, thank you. And like Ford, General Motors will start installing Tesla's charging ports in their vehicles starting in 2025. Joining us is Roth Capital Partners Senior Research Analyst Craig Irwin. Craig, it's good to see you. We've been sort of trying to figure out what exactly this means. Among other things, are there financial implications for Tesla? Like, this is obviously being seen as a win for Tesla. I'm just trying to figure out why.
So Ford and General Motors, obviously it's good for both of them because their customers are not going to deal with the issue of range anxiety. Range anxiety is actually very real. I imagine, having to drive half an hour, 45 minutes to go to a fast charger. It's a pretty frustrating thing. And I've lived through that. For Tesla, there's a few different things in place. So one is, yes, I can't imagine them not wanting to make money on this. So are they going to charge Ford and General Motors the same price for their customers to access the supercharger network? Or are we going to see them paying a premium? I would not be surprised if they were paying a typical premium versus the Tesla customers. And then you have to look at the impact on the Tesla brand. So nothing is going to irritate a Tesla owner more than lining up behind a bunch of vehicles from Ford and General Motors. I mean, imagine a big Hummer is going to take a charger for an hour in front of you while you've got to go and do your errands and get your groceries. It's not going to be something where people are going to say, "Oh, great, that car has General Motors badge on it," but the charger says Tesla. I paid for that. What's up with that? It's not going to be good for Tesla's brand, but it will be good for their access to subsidies under the infrastructure bill. So, lots of things in play here. People are speculating about what it means for earnings, but it's blatant speculation because we really don't know what the pricing is going to be at this point.
Kind of odd we talk about speculating that Tesla owners are going to have a knee-jerk negative reaction when they see other EVs charging at the supercharging station. Maybe it's because I don't rely on charging stations that much. But I go to my previous point. If Tesla announced we're not making any more supercharging network, I would be concerned. But that's not the case. There are so many charging stations now that they're everywhere, if you're not charging at home, mind you. All of these arguments are pure speculation. And you best believe Tesla is no fool. They're going to be making money hand over fist. And that's what the market is reacting to. If Tesla were to spin off its EV charging business, it would still be lucrative and worth way more than every other charging company out there combined due to its reliability and its efficiency. Popping up stations everywhere, seemingly overnight. Yeah, the market is reacting positively. That should not be a surprise.
So then I was going to ask you about biggest winners and losers here. Obviously, the losers might be some of these other Tesla drivers, as you mentioned, stuck behind a line of Ford and GM drivers. Yeah. But what about some of these other car brands? Does this perhaps force Honda and other brands to try and come to the table as well?
I think actually some of the biggest winners are going to be the other network operators because it's going to give pricing visibility on the sale of electrons. So Electrify America is owned by Volkswagen. They have a fantastic fast charging network across North America, and then obviously EVgo has a really solid fast charging network as well. Of the roughly 26,000 DC fast chargers, half of them, more or less, just under half, are operated and owned by Tesla. So those other owners of the infrastructure, I think, get a little bit more price visibility and quite possibly more demand. Across the board, this is going to be good for EVs. It's going to make it more competitive. And it's going to make it more realistic for drivers to be able to actually get out there and go from A to B, long distances, and not have to worry about charging. And, I think this is a great move for Tesla. It's a great move for both General Motors and Ford.
Craig, I want to dig a little bit more into what you mentioned about some of the other charging networks. Because if you look at EVgo today, if you look at ChargePoint today, if you look at Blink today, they're all down. So if you're right, it seems the market is sort of fundamentally misunderstanding what this means for overall for charging networks. Should people be buying those stocks today as we're seeing that dip?
Don't worry, Julie, I got this one. The only way I would recommend people buy those other charging networks is if Tesla put out a masterclass and those companies were present. Those charging stations are god-awful, and we see no signs of improvement. Should one of those companies say that they're announcing a partnership with Tesla, I would consider that a major bullish sign. But by the time you get that information, stocks can already uplift, take off, but you'll know that that charging company plans to be around in addition to Tesla. Tesla makes the best charging stations flat out, period.
So investors don't discern too terribly well between these companies. Actually, Tesla is very much a misunderstood company in my opinion too. So Blink, I think this is a positive because Blink does operate its own network, and Blink is OEMing charge equipment with credible suppliers. ChargePoint, I absolutely hated their stuff when I had to fast charge on a ChargePoint DC fast charger. It was a horrible experience. I did not like that. They do very, very well in level 2. That's where they make all their money. This puts more pressure on them to get it right. The network operators, I think, are going to get price visibility, and price visibility is a very important thing. Can you make money selling electrons? Tesla's obviously going to want to make money selling electrons. If you think about Elon Musk's political posturing in public, I can't see that really helping him getting a proportionate share of the funding from the infrastructure bill. Reality is he's probably going to get a minor share, and the other network operators are going to get a major share. Or else he wouldn't even be playing to open up the network to these other OEMs. To come back to Tesla, there's credible reasons to believe that there was forced labor, UFLPA, CBP impoundment in the last few weeks in North America.
Oh my God. Get the bearish narrative in while you can, folks. We're going to talk about some forced labor speculation from Craig Irwin that should give some investors pause that Tesla might be up to some shenanigans.
So, Craig, just going back out to about a 30,000 foot view for Ford and GM, them now partnering with Tesla, does that make their automobiles that much more attractive to potential car buyers?
Absolutely. It makes it easier for their car buyers to get out there and charge them. So they're going to get an adapter for the next few years until this is onboard technology. They're going to be able to roll up to one of these Tesla superchargers, put the adapter on the end of the charging cable and plug it into their car. It just made everything easier for their customers. It's a much more interesting, compelling charging experience. The Tesla owners speak very highly of the superchargers. Tesla's executed impeccably there. It makes sense for both Ford and General Motors. I commend both companies on this action. I often think Elon Musk uses things that are, I would call, misnomers for what he calls different things. But NACS, the North American Charging Standard, this is looking more inevitable now that we have two icons of American automotive production joining Tesla here. Very positive for the customers of those two companies.
So what's the broader significance of this move here? Anybody who's charged electric vehicles in many parts of Europe will know, there are a range of different chargers available right now.
I think that's the interesting significance of this, Anna, is that the EV manufacturers are moving towards kind of more standard equipment, and the world, the US and Europe need millions and millions of EV chargers, and I think company boardrooms are kind of deciding that, look, we need to come together and save costs and make this just easier for the consumer. There's still a lot of kind of concerns from consumers and drivers about purchasing an electric car, and the idea that it's going to be easy to charge, you'll be able to find your charging points in more places will make them more relaxed about buying an electric vehicle.
That's what it's all about, making the consumer more relaxed about purchasing an electric vehicle. At this moment, people are telling themselves, I don't think I'll buy that electric vehicle. I think I'll just stick to what I know. But in the next 5 years, that tone will change completely. It won't be, will I buy an electric vehicle? It'll switch to, which electric vehicle will I buy? And everybody producing electric vehicles is finding out that it's tougher than Tesla makes it look. Not only are they building electric vehicles at scale for a profit, massive profit, they've also acquired the greatest supercharging network on the planet. It benefits the consumer and the manufacturer to switch to a singularity of charging. And it might as well be the most efficient chargers on the planet.
General Motors joining Ford now in partnering with Tesla to use its charging network in North America. Under the deal, GM's electric vehicles will gain access to 12,000 of Tesla's fast chargers starting next year. And GM and Tesla shares both higher on that news. It is a very big deal. Joining us right now is ARK Invest CIO and CEO Kathy Wood. Tesla is, of course, the top holding of the ARK Innovation ETF. Kathy, we were discussing this just in the last hour. It's a remarkable thing I was listening to Spaces yesterday, Twitter Spaces, Elon Musk with Mary Barra, someone who has, it has been very hard for her to even utter the words Tesla over the years. And here is this partnership. What does it mean, do you think, long term, both for Tesla, but also for the legacy automakers, GM and Ford?
Well, I think it's great for America and our transition to the electric future, as Elon said. And I do think it increases the probability that our forecast of 60 million electric vehicle sales by 27, it has increased the probability that that is right. We had globally 7.7 electric vehicles sold around the world last year. Going to 60 million and is going to completely dominate the industry. And I think having both General Motors and Ford on this charging network, which is the big gating factor, range anxiety, gets us there that much faster. So I think there's two questions. Some people would say great long-term, short-term and long-term for Ford and GM. And everybody's a winner in this. There are others that are concerned that say maybe great for Ford and GM short term. I think there's almost no question about that. The question is what happens long term if effectively two of the largest American automakers are effectively driving sales effectively to Tesla, both in terms of the electric power piece of it and effectively the advertisement that is a Tesla charging station, what that means long term in terms of Elon Musk's ability to sell more vehicles, potentially even at cheaper prices. This reminds me of what happens with most technologies that proliferate and scale. There's a standard, and here we have a charging standard. Charging solves the range anxiety problem. And what's also very interesting about this is it does help Tesla underwrite the charging station expense, because if you look at Tesla's sales, they are highly concentrated on the coasts. Now it's going to make a lot more sense for Tesla to roll out charging stations that much faster throughout the country.
Right. How much of their revenue and profits do you now imagine over time will be a function of the infrastructure part of their business versus the automobile manufacturing part of their business?
Well, actually, we think another revenue source is going to be much bigger. And of course, that's the autonomous taxi platform. And we think it's going to drive the valuation because the margins associated with autonomous are going to be SaaS-like. So instead of electric vehicle gross margins in the 25 to 30% range, we expect autonomous, the platform strategy, to deliver 80%, 90% margin. So the combined will be north of 50%.
In terms of the grid, though, that they're building and these charging stations, you think that's a small part of the business? Yeah, and the services that they may be able to layer on at some of those stations?
We have not counted. So we are in print at $2,000 in 2027, and we have not counted the possible revenue sources associated with this strategy.
Not in my model either, folks. This is on top of what we already assume, ARK, myself, many others. This is not even in the evaluation of how they can spin this off and make more money from it. This is cream on top, and the stock market will react to this as opposed to the possibility that Tesla is on the brink of solving artificial general intelligence in the form of autonomous driving. This is on just the charging aspect of the business. That's it.
Haven't even done much in the energy storage business away from electric vehicles, because we think the most valuable part of the business will be the scaling of vehicles to create this autonomous taxi platform.
So, 2/3 of the world is covered by water and the rest is covered by you, Dan Ives. There's a lot of stocks in your universe that you cover, but Tesla's certainly right up there. What is it about the stock right now and the company that is giving you so much bullishness?
Yeah, I think what's happening, it's a sum of the parts. I'd almost call it an AWS moment. almost an Apple services moment for Tesla. Because what's starting to happen now is that the 313 area code, after years of resisting, they recognize they need Tesla. And I think when you look at the supercharger perspective, from a revenue perspective, you go out 2025, GM Ford, they get 15% share. You're looking now an incremental $3 billion, $4 billion a year of revenue that was not there. And I think what's starting to happen right now for Tesla, from batteries to supercharger to storage, the sum of the parts thesis is now starting, I believe, in the early stages to play out with investors. That's really what's starting to happen now with the stock, in my opinion.
There is another theory that, yeah, he got them on the network and he got them on the technology, but that design, they have 100 years of refreshing designs with high frequency, and in the end, that's going to mean better unit sales for the legacies than perhaps the Teslas. What do you think?
Yeah, my view is that Musk needs GM and Ford actually be successful for the broader EV vision in terms of just adoption in the United States.
Move the adoption curve higher.
And it's the jobs thesis, in other words, like from Apple, and I think that's really what's starting to play. And that's why right now you're seeing Farley and Mary ultimately partner with Musk, because I believe this is just the first step. It's starting with superchargers. And ultimately, I think next step could be batteries technology. And I think that's the golden goose right now, is that they've built the castle, waiting for others to call. Farley called, Mary called. And I think it's just the start of what I view, especially with demand I view it stable in terms of, we saw coming out of our Asia checks being Asia the last few weeks. Margins, I think now are starting to trough out the next 1 to 2 quarters. And I think that's why investors right now are really starting to look at this in a different story.
So explain to our viewers just the revenue opportunity from these charging stations. How does Tesla make money from them? What are other opportunities that it has from all these cars stopping at these stations?
Sure. So 12,000 supercharger network. And when you start to think about it, they're really the only one. That's why range anxiety, why would a Jim, a Dave, a Sarah not buy an actual technology? Why would they not buy EVs? It's because of range anxiety. So now supercharger, Tesla has it. They basically they make per charge. If now from a revenue perspective, services, we think by 2024, it's about 10 billion that we're talking about annually revenue, margins much higher than autos. So that's almost like software-like margins. Now, GM Ford, you get, let's call it 1 million cars on that network. That's incremental in the billions, 2, 3, 4 billion per year that was not there on an annuity. And I think that's why what you're starting, the reason I call it an AWS moment is I think for many years, AWS not really valued from an Amazon.
Right.
Now all of a sudden,
you
that
can
was
throw a pretty
part.
high multiple on a recurring revenue stream like that, right?
Apple services, okay, I'll assign 100 billion. You go back years ago, today, we think it's worth 1.4 trillion. So that's why I view it in terms of the reason I believe Musk is playing chess and others are playing checkers, you're now starting to see it play out.
And that's a deep dive into the news where GM and Ford both are partnered with Tesla when it comes to the Tesla supercharging network. As we've seen earlier, retail investors are in this to win this. I'm all for the IRA. I believe the purpose of the IRA is to bring manufacturing back into the United States and North America as much as possible so that we're not so reliant on foreign entities for whatever reason or another. But Tesla is going to do this regardless, simply because it's going to reduce cost. Factor in Nueve Leon. That's necessary to reach other untapped markets in that region, as well as factories all over the globe. These experts that we listen to have no idea. The chasm in difference of opinion is what screams opportunity. That's what keeps Tesla stock price suppressed. On one hand, bulls like Kathy and Dan Ives believe Tesla stock is worth north of $300 per share, while the bears and many people that just can't fathom exponential growth can't see how Tesla is worth that much right now. The average is somewhere still below 200, but that will change come next week as Tesla maintains those levels. Despite Craig's best efforts, there will not be a lot of negative press in regard to Tesla. The only thing that I think that will weigh heavily on Tesla stock is if the margin numbers come in extremely lower than expected. We're talking 17, 18%. I have a feeling it will be a huge drop. But if margins come in at 20+%, the stock will potentially explode. That's all I got for you. Be easy. Peace.
Masaka.